Welcome to the Baltimore Region Market Watch, brought to you by Real Estate Business Intelligence and MRIS Company. Let's take a look at the most recent activity in the Baltimore region housing market, which includes these areas. In November, the national economy continued to experience steady growth. 146,000 jobs were added and the unemployment rate fell to 7.7%. There were job gains across the private sector with the exception of construction and information sectors. Over the last 12 months, the U.S. economy has added 1.9 million new jobs. The national housing market continues to improve. Sales are relatively brisk. Pending home sales reached their highest level since 2007, and sales prices posted their largest gain in 6 years. New home construction activity has picked up this fall, and it's expected that there will be close to 900,000 new housing units built this year, a construction pace we haven't seen since 2008. Despite these positive signs, consumers and businesses are feeling less confident. The uncertainty is building as fiscal cliff negotiations do not appear to be leading to a comprehensive solution. And the uncertainty surrounding federal spending cuts is particularly important to the local economies in the Washington-Baltimore region. The Baltimore region has posted strong employment gains, adding 18,500 jobs over the past 12 months. The November unemployment rate in the region fell to 6.8%, down from 7.1% last month. The uptick in new pending contracts last month led to a rise in sales in November. The 2017 sales in November were 24% higher than November 2011 and the highest year-over-year gain so far this year. New pending contracts are up again relative to last year, but the growth has slowed. There were 2,213 new contracts in November, 6.5% higher than last year. The total inventory of active listings continues to decline and is now a little more than half of its summer 2008 peak. There were 10,777 active listings at the end of November, 24% lower than this time last year. New listings, on the other hand, appear to be stabilizing, up 0.5% from this time last year. While that gain is small, this is the fourth straight month of hovering year-over-year totals, which suggests a changing pattern. At $233,000, the median sales price is up 3.5% from a year ago. Price growth has been steady but slower than earlier in the year. The lack of inventory is not only putting upward pressure on the median sale price, but also decreasing time on market. At 48 days, the median days on market is down 33 days from last year. Buyer activity continues to improve, but seller participation in the market remains low. With the Fed's commitment to low interest rates while the nation's unemployment rate remains above 6.5%, it's feasible that many buyers could decide to wait until more selection becomes available. This could mean slower sales and stable prices in the near term. That's the Baltimore Market Watch for this month. Check back next month for the latest.